All right, week 7 is upon us. 1 week from today, we have our exam. As I said, the last class period, I believe it was last class period. With the exam coming up, we have a little bit of an accelerated schedule. We're going to have chapter 7. We're going to wrap that lecture up today. We have homework for chapter 7 on Wednesday. Like I said, it will probably be a shorter class period, 10 to 20 minutes shorter. It's not going to be like 10 minutes and we're done, but we will have a shorter class period than usual. And then Friday, we're going to have our exam review, which will consist of going through certain points of the study guide and making sure that we clear on the practice exam. I've said it already, but I'm going to repeat myself just to make sure everybody's clear on this point. So for the exam review on Friday, please make sure you review the study guide in detail on your own so that you can ask any questions that you may have. I will not go over every single point in the study guide. My study guides are ridiculous, okay? But I do try to give some context to information that needs to be included. And then as far as the practice exam, I encourage you to complete the practice exam on your own. So encourage you to complete the practice exam before Friday. That way, when we go through it, you will know what it is that you need to work on and what it is you need to do. The practice exam solutions will be available to start a class on Friday. So I encourage you to take notes as we're going through them, but you'll have access to all the answers. So you don't need to worry too much about that. Also, some conversations have come up, and I want to make sure that we're clear on some things. Students have started contacting me with group selections, and so I appreciate those of you who have reached out to me. With respect to topics, I did list some topics in the syllabus. I do think that a couple of these are really popular: cybersecurity and artificial intelligence. They are probably too broad on their own to select one of those topics, simply because they are such large areas. So I gave kind of some smaller areas within those subsets that I think you should select. So if you wanted to do cybersecurity, then you should probably think about doing ransomware or data breaches or something related to cybersecurity. If you're going to do artificial intelligence, you should pick machine learning, robotic process automation, something along those lines. I probably should include LLMs in there because that's kind of the new hotness in artificial intelligence. But so those are all examples of topics that I think would be appropriate for a presentation of that length. I just wanted to clarify that just so everybody's clear. All right. Let's go ahead and let's talk about chapter 7. So chapter 7 is our last process area. And a lot of the things that we've already talked about are going to be applicable here. It's called the conversion business process. My vernacular for this is inventory. And that is a bit of a misnomer, to be honest. I think that this is probably, to call it inventory is a bit of an oversimplification, because this is an environment where there's actually manufacturing that creates inventory. And so a lot of this is going to seem very familiar for ththose of you who remember our 221. There will be a lot of overlap with that. For those of you who are taking or have taken Dr. Otero's cost accounting class, there will be even more overlap in that area. I'm not going to go into the super detailed areas of this, but there are some things that you do have to remember for those courses in order for this to be relevant and understandable. So hopefully you do recall some of that information, and we'll go through it in necessary detail to make sure that we're clear on this. But as we've already talked about, revenue and purchasing are both involved in the trade of goods and services, whether we're purchasing the goods and services or whether we're selling. And so there's going to be overlap in that regard. So this is kind of the cross-section of revenue and purchasing. And as I alluded to last week, we're going to have one big dynamic model that's going to incorporate all three business processes. But we'll get to that. I know that's something everybody's looking for, is a massive UML diagram that's going to incorporate all of those. Trust me when I say that it is larger than the other UML diagrams, but it's not as difficult as you might think. So what is it that we're talking about when we talk about completing the process flow? Well, we need to actually understand that there are multiple process areas we could diagram here. All right. The one we're going to focus on is conversion, but conversion could actually include a lot of different elements. Primarily, we're going to focus on inventory, but we can also talk about labor, which would incorporate human resources and payroll. And then to a lesser extent, we could think about investing in financing, how we actually utilize resources or gain resources for long-term projects. And so there's a lot that goes on within these areas. We're not going to go into super detail on this. I think that if we try to cover every single business process that was possible, we would have a much longer course. This would be a two semester course as opposed to a 1 semester course. So we're going to try to keep it simple, and we're just going to maintain the 3 large context process areas, which would be revenue and purchasing. I do want to make sure that we're clear, though, when I say this, that just because we're talking about the high level process areas does not mean we're talking about comprehensive process area coverage. There's a lot more that we could cover within this area. There's a lot more to human resources. There's a lot more to investing and financing. To be honest, there's a lot more to inventory than what we're going to talk about today. But I do think that this is a good way to wrap everything together and tie it all up so it's a little bit clean. So what happens in between the revenue and purchasing process? That's where we get to the idea of to conversion. And this is going to be a figure from the textbook, which should look very familiar. This should look very similar to the transactions that you all performed back in 221. So just for context, what's happening in these transactions? Well, keep in mind that when we're doing conversion, then we've got multiple steps, and these are going to look a little bit different from probably your 221 textbook, and that's fine. There's no one perfect way to do this. But keep in mind, in conversion, we're talking about a manufacturing environment. So manufacturing means we create our own inventory. Now, the good news is this is a much more simplistic process if we're talking about a merchandising environment. A merchandising environment is just buy inventory, resell inventory, but that's no fun, okay? That's no fun. And to be honest, there's not a high likelihood you will end up in a pure merchandising environment. If you do it at a goods trade, many of you will end up services trade, but if you do it in a goods trade, it will likely be a manufacturing environment to some degree at the very least. So we need to talk about how does this conversion take place? Well, to keep in mind that one of the things that we learned back in 221 is that the conversion creation of inventory involves three elements, okay? That's going to be materials, labor, and overhead. And it's a shame that I don't teach 221 anymore because I had the most beautiful thing for this element. It was a picture of my 3-year-old niece. She was 3 years old at the time when I took the film, and she yelled out materials, labor, and overhead at the top of her lungs. All right, that's what she thought accounting was, by the way, when she was 3 years old. She's actually now 14. She would get humiliated if I showed that video anymore, but it was really, really cute at the time. Anyway, so materials, labor, and overhead, and how we track those. So these work in process transactions, that's where we actually recognize things going from a basic element in order to go into inventory, so the creation of inventory. And then also make sure that we're clear on this, that there's 3 phases of inventory. There's the raw materials, okay? There's the wood before it goes on the table. There's the work in process, which we're actually in process of creating the inventory. And then once it's been created, it goes into finished goods, okay? So 3 phases of inventory also need to be defined there. And then there's also the incremental items that we have to keep transactions for, okay? So all these items right here, you'll notice there's manufacturing wages that are being paid. So manufacturing wages is actually the payment of payables. So when they talk about manufacturing wages, you probably say, I don't recall this from 221. And as well, you shouldn't, because this is not how they characterized it in 221, okay? When we look at manufacturing wages, we're talking obviously about labor, but how do we characterize labor in an accounting environment? In most of our accounting environments, we said salaries payable, okay? So this first transaction is actually the payment of salaries payable, and these others are going to be the generation of labor, okay? So this one down here is going to be a generation of labor that goes directly into work in process inventory. So that's direct labor because of the direct cost. And the ones down here, this is going to be indirect labor because remember, labor that's not associated directly with production, we treat that as overhead. So that's how that was characterized back there. And then we've got some additional overhead costs for utilities payable, and then we've got the allocation of overhead. I do want to talk about this because, again, this was always one of those things that I found when I taught 221 was always confusing. Remember that there's a separation between the allocation and the recognition of actual overhead. And the reason why is because in their infinite wisdom, the people who started accounting way back in the day said, we want to be on an accrual-based system, not on a cash-based system. And I will argue that there are some good merits of accrual-based system. There's a much longer argument. I say that accrual-based accounting is kind of ridiculous because not only does it lead to stuff like this, but it also leads to fraud. That being said, okay, we're going to assume that we're still on an accrual-based accounting system. We've not become enlightened and switched over to tax or cash-based systems, which are intuitively more sensible. And by the way, don't tell Dr. Caden I said tax is intuitively more sensible, okay? I will deny I said that, even though it's being recorded right now. I'll say the recording got manipulated. So why is it the issue with an accrual-based system? Well, keep in mind that accrual-based system operates on this idea of revenue and expense matching, okay? The matching principle. Does everybody remember that from their accounting classes? The matching principle. I don't remember that at all, Dr. Barnes. So that's okay, all right? Again, not testing you on this, is just as background. Matching principle says that whenever we have an expense that we match that expense to the revenue or the period that the revenue is generated. So that's why we have this ridiculous system where we have allocated overhead and actual overhead, because usually the actual overhead amounts don't come until after the fact. So we have to make a guess as to what the current period overhead is. It's the whole reason that you went through that articulation back in 221. Hopefully your instructor explained it well back then and said, okay, we had to separate these out because we don't know when the actual overhead costs occur. That's the only reason this occurred, and you can thank the original accountants who said accrual-based system is a way to go, all right? All right, so if you agree, great. If you don't agree, that's fine too, okay? And then, of course, once we've actually finished production, that's where we are going to generate inventory. That's when we create finished goods. To this point, we've actually just kind of called it inventory, but in a manufacturing environment, we do have to separate out the categories because they do need to be identified specifically according to what phase of inventory they're in. So raw materials inventory, work in process inventory, finished goods inventory. And all of this is part of the conversion process, transforming purchased goods and services into goods and services for sale, just managerial accounting, what you guys have learned way back in 221, and to save the same degree to cost accounting. Which again, if Dr. Otero was here, she'd throw stuff at me because she'd say cost accounting and managerial accounting are different. They're the same thing, okay? They're the same thing. I don't care what she says, okay? I don't care what she says. And if that's being recorded, and she can come back to get me on that one, because I will argue that I will say that every time. Anyway, how does this work for our purposes? Well, in order for us to be able to utilize this information, we need to know how it actually fits within the greater business process. So let's go ahead. We're going to come back to this because some of the elements that are in these transactions are relevant to us. Some are less relevant, some are very relevant. But we're going to go with our conversion process example, starting with our narrative. All right. And this says purchasing process description. I think this should say conversion process description. Yes. Did you do a copy and paste error, Dr. Barnes? The answer is yeah, probably I did. So if you're making notes here, you can change this to conversion because I think that's what that should say. So conversion process description, that's a summary. I think it's on 197. I did think I had to get the page number correct. So the quantity of inventory item drops below prescribed levels, production of new inventory occurs, which makes sense because we're trying to maintain inventory as we need for production. But if we believe that there's a certain level, a certain quantity, if you've done a management class, you've probably heard the term economic order quantity, and that's going to actually dictate when new production needs to take place or when new ordering needs to take place. So production of new inventory takes place. Start of production. Raw materials are transferred to work in process inventory. That's that transfer from one category of inventory to another. Based on the stage of inventory production, additional materials and labor are assigned to work in process. Okay. And it's important to note overhead, which includes indirect materials, indirect labor, is also allocated to work in process. So that's going to be a really important distinction, that the allocation is going to be the estimate, whereas the actual cost will be assigned later on. And then upon completion, work in process inventory is transferred to finished goods inventory. Now, again, if you understand these concepts at least a basic level, this will not be all that difficult. Again, I'm not going to test you on overhead calculations. I'm not going to say, all right, guys, remember activity-based costing? Let's allocate overhead on ABC. And I don't want to cause nightmares like that. All I want you to understand is the conceptual underpinnings of this and how this works. So that's all that we're trying to get suss out here. Now, how does this fit within a diagram? Now, this is our narrative, okay? This is our narrative description. How do we create a diagram from this? And the answer is, it's actually pretty easy. The diagram itself is not complicated, but it does require some explanation for the points below, okay? So we already know that there's going to be an activity that's going to authorize production. When we hit a certain point, we're going to say, we need more inventory. That's the creation of inventory. In order to create inventory, it gets transferred from raw materials to work in process. That's the issuance of raw materials into work in process, okay? Then that's when work starts taking place. That's when we start taking that piece of wood and say, this is going to be a chair, or this is going to be a table, or this is going to be a Corvette, because I'm a really good word worker, okay? But whatever the item that we're putting into a finished goods, that we're in the process of making that. And that's going to be the conversion takes place. By the way, let's see, I want to recall if you remember this back from 221. So you heard the term conversion costs back in 221. Does anybody remember hearing that or hearing that discussion? Why were they called conversion costs? Because these are costs that are required to convert a raw material into a finished good. And that's why they're referred to as conversion costs. And those conversion costs were labor and overhead, because those are the additional costs. The raw materials themselves are a separate cost, but conversion costs represent those additional costs you have to change to convert that particular item. So we're going to add those items to direct labor and allocated overhead to work in process, as well as any additional raw materials, but that's captured by overhead. Those would be indirect materials. And then finally, we're going to complete production. That's the transfer of finished goods inventory. Now, again, diagram itself, not difficult. But if I asked you this diagram, I would also ask you some important considerations here. What are the transactional recognitions that occur at every activity phase? So here, issuance of raw materials, what does the transaction look like? So let's go back to our transactions, okay? Remember, we moved from raw materials inventory to work in process. It's a little bit confusing because raw materials inventory is the credit. But that's taking it out of raw materials inventory and moving it into work in process. So the first transaction, this one on September 1st, that's the one that's associated with the second activity, right? Then we perform the work, and that's where we move items from labor and allocate it over into work in process. Because remember, again, three elements that go into work in process. There's materials, labor, and overhead. We've already performed the transaction that is going to recognize the movement of materials. So we need to recognize the movement of labor and overhead. So going back again, we got the movement of labor right here, which again, if you want to recognize this as salaries payable, that's fine too. I don't particularly care the format of the journal entry, just to want to make sure that we understand what's happening here. And then we also have the allocation of overhead that occurs right here. Again, the differentiation between here and here, these two transactions, those are actual overhead transactions. I am very, very unlikely, I will say like a 99.5% chance that I will not ask you to recognize actual overhead transactions, okay, on the test, because that's just muddling the things. Should you understand the difference? Probably, okay, but these transactions are not going to be ones that I will ask you to record. 99.5% chance of that. I would ask you to recognize these type of transactions as they are relevant to the activity that we're talking about here. So that second activity, we've got two journal entries, one to recognize the labor, one to recognize the allocation of overhead. And then the fourth activity, the final activity, that's the completion of production. That's where we're no longer work in process. It's now finished goods. So we move it out of work in process, credit to work in process, and debit to finished goods inventory. So, and that's just journal entry right here. So before we move on, how does this fit our existing narratives, our existing processes? Well, keep in mind that the whole goal of purchasing was to acquire inventory so we could use it for some purpose. Is that going to be true for regular inventory and raw materials? Yeah, it'll be true for any type of inventory that's we're purchasing. So that purchasing process is that acquisition of materials that we would need right here. So before we can even authorize production, we have to purchase the raw materials that we need for production. So if raw materials are running low, that's where the purchasing process kicks in and says, all right, we need to acquire more goods that we can use for production. And then once we complete production, what do we do with those finished goods? We just put them in a warehouse and just let them sit there forever. It's like the Lost Ark of the Covenant and the Raiders of the Lost Ark. How many people have actually seen Raiders of the Lost Ark? Oh, I really am old. Okay, yeah, okay. Anyway, so we don't actually just put it in the warehouse, where the whole goal of finished goods at some point is to sell those goods, okay? So that's where it moves from the conversion process into the revenue process. So purchasing process is over here. Before we can even start our conversion process, purchasing process has to kick in. And then the revenue process occurs over here after we've finished the production and we should have finished our final event. So again, this all fits together. This is the connection between the purchasing process and the revenue process. Now, just as a simplification, this might come up. What happens if we're talking about a merchandising environment? This is a manufacturing environment, which I said is the more complex environment. And so this is the reason we're talking about it. What if we're talking about a merchandising environment where we just purchase inventory for resale? Do we need to worry about these transactions or these activities right here? Probably not to the same degree, okay? Probably not to the same degree. There probably is some activity. Like think about how Walmart goes through their process. They get goods shipped to them to a warehouse. So there's an activity of shipping the goods and selling it to the customers. Then usually probably the goods they acquire are much, much larger quantities than the customers will buy, okay? So if they get shipped a pallet of 20 big screen TVs, it's unlikely they've got a customer that says, I'll take all 20 of those, okay? I mean, maybe it's entirely possible, but it's just unlikely, okay? So that's going to be kind of a conversion that we would see there. It's a minor conversion. We're talking about an activity. It would be the shipment of goods and then kind of the dissection or the dissemination of those goods in smaller quantities. But for the most part, a much more minor process. I won't ask you to create an activity diagram for the conversion process for merchandising, mostly because we're learning this, but it's still fun to think about. Expanding out upon this, what happens in a expanded BPMN diagram? Well, we're going to talk about two different areas. We're going to talk about inventory management and the conversion process itself. So this is just kind of an expanded diagram with note. I will say that I do like the gateways being set up, so the multiple gateways that are being noted. So there's an opening and a closing gateway. So basically, we have authorized production, and then once the production sets up, they actually set up a batch. So you all have heard about the batch processing back in 221. What does batch processing mean? It means we don't just create one good at a time in most manufacturing environments, okay? That's not true for all manufacturing environments. I will say that probably for Boeing, for example, we were talking about Boeing, when they create a jetliner, they're probably not creating like a dozen jetliners at a time, all right? They're creating that one on order. But for like something like cereal manufacturer, they're probably creating more than one box of cereal at a time. So doing a batch production, all right? So the issues of raw materials, they're going to perform the work, they're going to inspect the work. There is actually going to be a point where we actually recognize where the batch is done. So it's going to be whether the single production is going to take place. And if there are multiple batches, then we're going to recognize whether all the batches are done. Okay, where all production is done. If that's the case, we complete production and update inventory records. There's also kind of a decision loop here that's interesting because we didn't include this in our basic activities. And by the way, you don't have to replicate this on the exam. I will not make you replicate this diagram, but you should be able to interpret a diagram like this, which is why we're discussing this. So what's happening here? So inspecting the work, and then if there's a problem with the production, then we get rid of anything. So say there's a box of cereal that doesn't have any cornflakes in it, or for some reason it's open and half of them spilled out. Is that something that they want to sell to the customers? Probably not, okay? So that would be an inspection and discard process, which if you ask Dr. Otero, inspection is a cost, is a efficiency cost, okay? And basically what that means is that if we did everything correctly the first time around, we wouldn't need to have inspections, but we're human, so we don't do everything the first time around, hence the reason we have inspections, which is what we're including here in this loop here. New activity for inspections, because again, we're imperfect individuals. You guys need to step up your game so you can become perfect for the future. We don't have to have inspections anymore, all right? I'm putting that on you guys, putting that on you guys. 100% on everybody's exam. All right. So let's go ahead and talk a little bit about summary. So now this is going to kind of set up our UML diagrams that we're going to be talking about here. So when inventory levels drop below a certain point, new inventory is authorized production. And the quantity of inventory is used, or quantity of inventory to be produced and raw materials used is determined based on existing finished goods inventory. So that's pretty straightforward. We've already talked about that. We know what we need to produce based on what the current amount is and what we want to have after everything's said and done. Raw materials executed in production, materials used to document and bill materials, and labor is incurred in production. All right, so let's go ahead and talk about this. Now, this UML diagram is a little bit more challenging than our other UML diagrams, okay? Simply because we're dealing with foreign concepts here. For revenue and for purchasing, our REAs were pretty self-evident. For this one, it's not. And so I'm going to caution you, as you're preparing for the exam next week, make sure you are very, very clear on the UML elements for this diagram. Because the other ones were really easy. If I gave you a UML diagram, you should be able to plug them in pretty easily. So what does that probably tell you? Dr. Barnes will likely ask you a question on this particular diagram because it's the most challenging of all of these. So let's go ahead and deal with the REAs, okay? The UML elements, our classes, all right? So the classes themselves, the ones on the either end are not particularly difficult, all right? So resources, what type of resources are we dealing with here? We're talking about production of inventory. So basically we could just say, well, it's inventory, Dr. Barnes. And you're absolutely right. Inventory is going to be our primary resource here. Let's go a step further. Let's go ahead and split out the inventory into the different categories. Now, the top category is going to be our inventory. It's not transformed. So that's what? Raw materials, okay? And the bottom category is going to be our inventory that's fully transformed, which is going to be our finished goods. Now, could we include another element for work in process? And the answer is yes, possibly, if we really wanted to. But we know what the eventual conclusion of the raw material conversion will take place. And work in process is basically a holding account. It's something that we recognize the categorization of inventory when it's not complete. So basically, we can categorize inventory in one of three ways. We could say completely untransformed, partially transformed, fully transformed. But we know that ultimately we would like it to be one or the other, not transformed or fully transformed. So in our diagram, we're going to leave out work in process inventory. Now, the only reason we're doing this is for simplification purposes, because if we try to include work in process inventory, we have to include all the associations that go along with it. And again, the fewer associations we have, the less we have to do with that, easier it is. Now, if you included a UML diagram, if you included work in process inventory, as long as you had the appropriate associations, that's fine. But I encourage you to work with this one. All right, agents is much, much simpler. What is our category of agents in this particular diagram? We have one type of agent. Employees, the people who are actually doing the conversion process, all right? Now, here's where the challenge comes in. What are the events, all right? And the events can vary depending on situation, but let's talk about the one that's described in our conversion process summary, okay? So our first event is basically saying that we have determined what we need to know to actually start production. We know what our goal is, what our current situation is, what our goal is. So what takes place after we've made that determination? What's the very first thing that happens? Raw materials get issued. Okay, so there's a materials issuance. All right, so raw materials get issued for production. Then once you have the materials, what do you start doing? You start producing, correct? Okay, so you're authorized to start production. And then once production starts, then what gets added to production? All those additional costs, okay? So we could actually say labor and overhead get added. We did not actually include overhead in this particular diagram because overhead is encompassed by both materials and labor. Remember, overhead costs are basically those indirect costs. So if we just generally categorize materials and labor, we don't have to specify overhead. So we're just going to say labor gets incurred, all right? How does this relate? Well, here we go. There's the diagram that we just talked about. Now, again, there are multiple variations on this diagram that you can include. If you wanted to include an overhead element, an overhead class, you could do that. If you wanted to include a work in process class right here, you could do that as well. We're trying to keep this at the most basic level, So this is the one that I would encourage you to know, is what I encourage you to know. Now, there's a couple of items here that you will note here. For the most part, we do not need to include, the explanation. This is directly from the book. And so you do not need to remember bill of material, labor plan, or duality. Basically, there's attempts to clarify these associations that exist, okay? So we can go into more detail about that. Like when we talk about raw materials that are being issued for finished goods, a bill of material is going to be issued so that we actually know what the goal is of issuing raw materials. What is the final objective, okay? Same thing with the labor plan. We want to know how much labor is going to be used to produce finished goods. And then duality is just an explanation of the association that there's kind of two sides to the association. All right. So let's go ahead real quick. You'll notice I've noted a couple of multiplicities. Let's see if we can interpret these multiplicities real quick, just as a recognition, okay? So here we got a production authorization of 0 to many, okay, for employees. So what is it saying? It said there could be 0 employees that are involved in production. Or sorry, employee can be involved in 0 production. My apologies. The employee can be involved in 0 production. I guess you could say employees could be involved in, or 0 employees involved in production. That's the other way around. So employees can be involved in 0 production. They can not be involved in the production process at all, or you could have it could be involved in many production instances. So many production instances. What about 2? Okay, so 2 looks like it's right in the middle. So let's go ahead and talk about both sides of multiplicity. Okay, so we'll start with finished goods. Finished goods can be involved in 0 production authorization, so merchandising environment where we don't have any production that takes place, it goes immediately. Or finished goods can be involved in many production authorization, so we actually have multiple stages where the finished goods are incurred. Production authorization involves 1 batch of finished goods and only 1 batch of finished goods, okay? Number 3, over here, all right? So employees can be involved in 0 material issuances. So again, not involved in the production process, but they're involved in many production process or many materials issuances, excuse me. Bill of materials, or not bill of materials. Number 4 is falling in the middle here. I just read it. So let's go ahead and look both. Raw materials have to be involved in at least 1, raw materials involve at least 1 batch of finished goods because there's no point in having finished goods if that's the case. Or they can involve in many different finished goods items, okay? And then finished goods can involve 0 raw materials or many raw materials. So the 0 amount of raw materials doesn't make any sense. Why can we have 0 raw materials? Again, we're assuming the idea that there could be merchandising that takes place where we acquire finished goods already in their finished form. So we don't have any raw materials, we just acquire them as finished goods. Then finally, labor operations here at number 5. So labor operations, or employees could be involved in zero labor operations or many labor operations. Again, that has the idea that they're involved in the production plant. That you have some employees that are involved in production and some who are not. All right, so basic multiplicities there. We probably could have gone into more detail on that, but I was just kind of following what the book says. I guess I do want to talk really quickly about these multiplicities here. So we talked about one side of the multiplicity, but not the other side. So what is this saying over here? So materials issuances involve one employee and only one employee. So if material is going to be issued, then we're going to have one employee do it, and that's it. Okay. Same thing for production authorization. Employ one employee and only one employee. Labor operations could involve one employee and up to many employees. So if we're going to have a labor operation, something where we issue labor, then we could actually have as many or multiple employees involved in that process. So that's a little bit dicey simply because the multiplicities are a little bit different here, but again, has to do with what operation we're dealing with here. Okay. So oh, okay. There was one more I want to talk about. So this is one thing that's kind of incomplete here. You'll notice here that we do not have a multiplicity here. So what I'd like you to write is I'd like you to write 1 to 1. It's kind of an incomplete one. Sorry, I was reading a note and my handwriting, as always, is just terrible. So what does that mean? What are we talking about when we talk about 1-to-1 relation? Okay. So that's going to say finished goods, a production batch of finished goods associated with one labor plan and only one labor plan. Okay. And labor operations are associated with one batch of finished goods and one batch of finished goods. So basically, whenever there's going to be a labor or there's going to be a batch, then one batch is associated with the individual labor plan. If you need a different labor plan, then that's going to be associated with a different batch. So one batch to one labor plan. By the way, we may actually encounter this again in the future. We won't be actually looking at UML diagrams, we'll look in different environments. Oftentimes when you see a multiplicity where there's not a corresponding multiplicity, it means that the multiplicity is the same on both sides. Which that's the explanation of why we didn't see that. Since we haven't really talked about that, that's why I wanted you to write down the 1-to-1 multiplicity, but basically what that means. All right, so this is well enough in its own. Let's go ahead and talk about how we can expand this out now. So I said before, first of all, let's expand this out. So I said before that we could actually include multiple items here. So if we wanted to include multiple items, again, we could have work in process here. We could actually have our overhead down here. We can also include some conceptual structures here. So some conceptual structures that would actually explain relationships between some of our activities here. So a bill of material is basically just going to say what materials are going to be issued for production. And you'll notice here that it gives a diagram that says the type image. Just for clarification, when we see the term type image, all the term type image means is that's just management information on the production process. So type image is basically just a short-term vernacular for management information on the process. So what we're saying here is when we see a bill of materials, somebody who's actually overseeing production, they want to have that bill of materials in order to be able to understand what is happening during production. So when we say type image, that's just basically an activity that's supposed to explain what the information is for management purposes. And we've seen this one before. We talked about product categories, okay? Now this was our finished goods item, but we can actually refer to this as generally as products. So employees can actually be assigned to manage product categories, and if that's the case, we can create a conceptual structure here. We actually saw that in both the revenue process and the purchasing process. It's true for our conversion process as well. By the way, why did we change the names and the activities? This is our exact, if we remove bill of material and we remove product categories, this is our exact UML diagram that we were just looking at. The only difference is we changed the names here, okay? We changed the name from raw materials to finished goods. We changed it from materials to product and materials and products. Does anybody want to make a guess as to why that's the case? Tell you why. Because that makes it fit a lot more in our expanded UML diagram. So our final goal here is to actually see how this incorporates all together with their entire process. So instead of calling these raw materials, I would just generally refer to these as materials, and these finished goods are products. Now, in the diagram that you would actually create, like if I had you fill in the blank diagram or create part of this diagram on an exam, if you call it finished goods or products, that would be fine. I don't care which, okay? If you call this raw materials or materials, that would be fine as well. All right. I don't particularly care about which nomenclature you use, just as long as you are specific in the area that you use it and consistent with that, and it makes sense. Like if you called this up here finished goods, that would be incorrect because this is not finished goods. Finished goods occur down here. But why? Why is that the case? This is our expanded UML diagram. This is our goal. So, by the way, I will not ask you to replicate this 100% on an exam. I have had students that have done that, okay? They wanted to be very, very thorough. I have had students that do that on previous exams, but I will not ask you to do that. That being said, you should understand the elements of this entire diagram. So I encourage you to study it. If you feel like that you want to replicate it, that's fine, okay? But I will not ask you to do that. Rather, what I want you to understand is, how does this relate to the 3 separate UML diagrams that we've looked at before? Well, remember, the goal of an expanded UML diagrams we talked about in the purchasing process to see what items are the same and what items are unique, okay? So let's talk about the items that are the same, the ones that are going to be consistent between all of these areas. So with purchases, we know that purchases is going to be consistent, is going to have consistent material or consistent, or not consistent. It's going to have the same item here when we talk about raw materials, because remember, the whole purchasing process is to acquire inventory so that we can actually create inventory. So acquire raw materials so that we can create a new finished good. So purchasing process is going to actually be the acquisition of these materials for production used in the conversion process. Down here at sales, what do we sell in an environment, okay? We sell the products, whatever the inventory is after conversion, those finished goods. So these products here are going to be unique to this area as well, okay? Going to be unique, are going to be common to both conversion and sales, because conversion creates the finished goods, sales or the revenue process sells the finished goods. So we on board so far. Raw materials is common to purchasing and conversion. Products or finished goods is common to conversion and sales. What about employees? Okay, which of the 3 processes are employees involved in? All of them, okay? All 3 processes. So you will notice that it actually has associations to all 3 processes, okay? And then cash we talked about specifically with respect to purchases and to sales. And technically speaking, that's the correct answer, is that it's going to be a common element, common resource between purchases and sales. If you wanted to make the argument that it could be involved in the conversion process as well, I would buy that argument, okay? Technically speaking, it was not in our conversion diagram, so we wouldn't include it, but you will notice it's right here in the middle of conversions, which is really confusing, okay? That's because we can't really have a diagram that actually includes it purchase and sales, but not in conversion, because it's right in the middle. But cash is common to purchases and sales. As for the rest of the elements of the diagram, those are the unique elements. That's basically, once we've identified the common elements, everything there is unique. So remember, we had the events of purchasing and cash disbursements and purchases, and who do we purchase from? Our vendors or our suppliers. For sales, we receive cash from our customers and we make sales to our customers, and our customers are going to be our other agent, okay? So all this diagram is just a matter of taking the common elements and putting them together and then diagramming the rest of the elements. Now, again, you do not need to recreate this diagram. You do not need to be able to recreate the multiplicities. You definitely need to be able to understand the common elements of the diagram and be able to explain the multiplicities. But I will not ask you to recreate this. And if you do it, I won't give you extra credit on the exam, okay? I will give you a free brownie point if you do it on the exam, okay? And I don't know what that's good for, but at least you have it, okay? Put it on your resume, okay? Brownie point in Dr. Barnes' AIS class, all right? But that's not necessary. It's not a requirement. I would not waste your time on trying to learn that. Last thing I want to talk about is I want to talk about controls. Now we kind of, oops, that's not what I meant to do. We kind of danced around this, all right? So really quick, remember that the way that we framed this up back in chapter 5 is we said that we create business rules, and business rules are responsible for the implementation of controls. So how do we characterize controls previously? We said controls are simply a response to a risk. In an AIS environment, we're primarily concerned with IT controls, okay? And IT controls are characterized according to 2 criteria, or 2 possible categories. General or access controls and administrative controls, okay? I think that's not right, not administrative controls. What's that? Application, that's what I meant. I remember you get the letter A. That's the problem with getting old, is that you forget those words. Okay. The application controls. Okay. Goodness gracious. It is Monday. And I've got it written down on the slide. It actually has application right here. Okay. So if I could just read. So what is the difference between these again? We talked about general access controls. Those are the controls that dictate what employees have access to, what employees can do within the system. The application controls, those are what the system is capable of doing or what the system performs, okay? Usually for the purposes of creating some sort of audit trail or some sort of tracking. So since we've got a little bit of time, let's go ahead and look at the expanded chart within the book. And by the way, I would encourage you, there's one of these for every single one of the chapters in business processes. So there's one for chapter 5, there's one for chapter 6, and the one for chapter 7 we're going to look at. I'm not going to ask you detailed questions about these, but I encourage you to study them before the exam because they will give you a little bit of clarity as to how these controls operate within an environment. So going over to this diagram, you'll notice here that we've got a sliding bar, and there's a reason why I said that you might want to look in the book on this, is there's a lot more detail on this than just what I show in the slides, okay? So what's happening here is that basically we're identifying the process steps, and we're saying, what is the goal of the process? Whenever we have any process step, then we examine some sort of risk, okay? So the risk that's going to be identified says, okay, what happens in this process and what do we need to be aware of? Well, let's just look at one example, okay? So an authorization of production, we must have an employee with a proper authority, authorized production to ensure finished goods are available to meet expected demand. Now, what is the risk here? What is the risk that we could identify in this situation? We can have an employee that is authorizing, or that employee is starting production that does not have proper authorization, and so they're creating products that we don't really need. So the goal of any production environment is to say we want to produce goods that is going to be demanded by our customers. So that's what the authorization step is. So yes, we do need more widgets. I don't know why I defaulted to widgets, but we do need more widgets. Let's produce more widgets so that we can actually meet that production. So then we actually have some authority, it's authorization steps. So anytime that we have production greater than $5,000, we have a control in place saying the supervisors have to actually authorize the production. Now, how does this break down into access and application controls? Well, an employee who's authorizing production cannot modify inventory records. Now, we've talked about this already. This is a control that I really like to talk about, and you probably should get acclimated to me talking about this type of control. There's a separation of responsibilities between custody of assets, authorization of transactions, and recording transactions. Does anybody remember what that was called? CAR, Dr. Barnes, it's CAR, C-A-R. Well, good for you. Yes, that is correct. But what was the actual term for it? Segregation of duties. Okay, segregation of duties. That's one of those types of controls. In this situation, we're saying we got a separation between authorization and modifying inventory records, which is recording. Why is that the case? Because we don't want somebody modify or authorizing production when they can record that production. They could authorize production that is not legitimate. Okay, they can record the transaction and then basically authorize a transaction that should never have been taking place. All right. So separation of that responsibility there, and it says system must provide authorization order number control, default values, range limit checks, and also create an audit trail. So this is kind of an interesting one. This is going to be an extension of that authorization step we had before. Now, the easiest way to think about this is that range and limit check. So an employee tries to start production, and the production is for $10,000. The system says a supervisor approval is necessary for anything that's above $5,000, because that was actually the control that was in place back here, remember? The supervisor must authorize production for $5,000. So the system knows that if production tries to take place and it's more than $5,000, there needs to be an authorization code. There needs to be an authorization code entered. Also, when that takes place, it actually creates a document saying, all right, production took place on this date. It was authorized by this individual. So anybody who's following up on it saying if it was legitimate production can know when the production took place, how much it was for, and who authorized the production. So that's basically the separate steps that we identify. And we can go through this process for every single one of them. It's fairly intuitive, but again, remember the separation out is to note what is the employee able to do? What can the employee access? What can they perform? And how does the system track that? And if necessary, prevent activity for certain types of actions. Those are some things to consider when you're thinking about the difference between access controls and application controls. And with that, we are done with our lectures before the first exam. We do have homework on Wednesday, so I'll see you then.